We've seen SIPs hitting all-time new highs. So what is driving this retail investor participation, and how important do you think it is for the long-term growth for the industry?
So of course, I think a lot Navneet has already spoken about, what's driving, but clearly, ever since 2016, I would say over the last 10 years, more specifically after demonetization, there has been this, incremental shift, or what we talk about financialization of savings, where people have been moving their assets from cash to bank and bank into mutual funds and mutual funds through SIP. So this trend of investing in mutual funds, SIPs to create wealth, I think is becoming more and more acceptable. And what I feel is that the experience of investors over the last decade has been pretty good. More specifically, over the last 5 years, broadly, investors have made good returns, right? And there is a chain effect. So as more and more people are making more money, and then there are the neighbors who are watching them, and then they are piling up. I think that is the first thing. Second, I think clearly investing in fixed income, adjusted for taxation and inflation, there is no net real return. Real estate takes away 50-60%. Largely, it is your home. Gold, of course, has done well in the last 1 year. Things are changing there, so I have different thoughts there. But people have understood that if really you want to add 3-4% to your purchasing power so that you can achieve your long-term goals, I think you can't achieve that without going into equities. And then there are certain do's and don'ts of equities. You need to be a long-term investor. You need to invest regularly. You need to go through the ups and the downs. In fact, what we have been seeing that people have understood that when you go through downs, you should double up. So you should double down on your investments. So we are not seeing, every time there's a correction, we don't see investors running away. We are seeing more investors actually coming inside or adding to their SIP book. So I think people have understood that yes, you need to have equities, whatever percentage. Some may be having 10, 20, 40, 50, whatever. Need to look at long term. And clearly investors are also seeing this whole optimism, which again Navneet was talking about, the positivity of India. We are talking about Amrit Kal in the next 25 years, developing to developed economy. As the economy will get into the developed kind of a status, there'll be enormous wealth creation which will happen out here, and I'm sure everybody wants to participate in that. So I think combination of all of these things, good experience, need for creating a lot of wealth, faith in our country, faith in our economic growth journey, all of these things I think are driving investors to move towards equities, and what better way than mutual funds.
Akhil, I'll get to the SIP stoppage ratio. It's still above 70%, and though it has come off from the peak high levels, but what is driving this investors' trend towards it? And of course, what would you say that does the short-term market swings do also shape the investor behavior? And what would you argue on this?
I think we are going through an evolution. Investors have gone through an evolution. Like I said, there was a phase when markets used to fall and we used to immediately see termination of SIPs, redemptions of from your mutual funds. But in the last 5 years, what we have seen is that incrementally, that is not what is happening. Look at current calendar year. You're talking about SIP stoppage ratio. Except for March and April, which were the only 2 months where we saw negative SIP registrations, which was, I think March was negative 11 lakhs and April was bad. It was negative 1 crore something. Every month, Jan, Feb, and then up until now, every month we have seen 14 to 15 lakh new SIP registrations. Gross SIP registrations is upwards of 40-45 lakhs every month. Right, and stoppages maybe about 35-36, so you're seeing a net 14 to 15 lakhs every month. So what I'm seeing, or what we would like to see, is that net you have to be positive. Net the SIP amount has tripled, right, in the last 5-6 years. This year itself, I think we have gone, if my memory serves right, we started the year with 25,000, we are closer to 30,000 of monthly. So your net SIP in terms of amount is going upwards. Your net new registrations is going upwards. So I think the trend of what used to happen 10, 15, 20 years back, that run away when the markets go down, I think people have a lot more patience It's not a warning signal. I get surprised every time, when there was a India-Pakistan war, I thought now things will change, right? When there was a Ukraine war, that time when the corrections happened or election results, there have been so many instances where time and again we have tested that, the SIP book is not really coming down anytime soon. Something has to be really, really, really bad for this number to reverse.